Now we got a mic, right? Now you can hear me? And what about the camera?
Okay.
Yes. Okay, okay. I'm not
Can
gonna
you hear me,
scare.
Thomas?
I can hear you fine. Can you hear me?
Absolutely.
Okay, not gonna scare anybody with this necklace on, am I? Because I can tuck it in. We don't want
No
any
worries.
problem. Okay, okay. So you
No
can
worries.
hear
No
me.
worries.
All right. I don't
Perfect.
do things like this, man. So
Yeah, yeah. This a little challenging. We'll be okay.
now we're here. It
Um,
wasn't bad. I got people. That's right. They got me here.
gotcha.
So again, when we say live, it's just going to be me and you talking. Will anybody else see it? Will I see anybody else?
Yep. We're live right now, so we can start the show.
Okay.
Uh oh.
So can't let me tell this friend I
Um.
can't talk now, and that'll be what it is. Okay, sir.
Alrighty. So let's start the show. So welcome, guys. We are doing our 12:30 live on Fridays. And today we have a tax attorney by the name of Thomas Ward, and he's you know he's probably been around for a little while. So I want Thomas to be able to give us a little bit of background on himself and how long he's been practicing tax law.
Cedric, thanks for having me. I am a 33-year practicing tax and business transactional lawyer. Been in Minnesota about 33 years. Um, in terms of educational background, I have an MBA from Penn State before I came out here to Minnesota to attend Hamlin University's law school to obtain my JD. From there, I went to Washington University's law school to obtain the advanced law degree and LLM in taxation. Worked for a law firm, worked for a CPA firm, and about 28 years ago, got tired of saying work for and started my practice. I
Oh wow,
practice.
absolutely. That's amazing, man. 28 years. That's a bit of time.
I've been at it for a minute. I'm pretty
And
proud of
so
that. Go ahead.
And so, Thomas, if you can explain to the audience about, obviously we know you're a tax attorney. Can you explain exactly what you exactly do?
Certainly. And I will clarify I am a tax and business transactional lawyer. So, in
Okay.
the vernacular, I do the deal. I assist people with the acquisition and sale of businesses, acquisition financing, the formation of entities. I merge them, spin them off, split them off. If you remember the first black billionaire, Reginald Lewis, he had a book called Why Should White Guys Have All the Fun? And in it, he explains that his man, as it were, was a tax lawyer. As a tax lawyer, you address the tax consequences of business transactions. And of course, then I address all other issues related to the taxation, corporate and individual, of again, activities of a party. So, again, there are tax implications of buying, tax implications related to selling, tax implications once you are functioning as a tax attorney. Uh, you would address what we call compliance matters. That would be the preparation and filing of a corporate tax return or individual income tax return. As a business owner, a party might use the withholding taxes collected from employees' wages and not pay them over to the IRS or the Department of Revenue, which would cause you to have a tax liability there that would have to be addressed. Routinely, I have clients who owe the IRS a $500,000 up, down, from again withholding these payroll taxes and not paying them over. Other times you have tax issues because you, again, have incurred an income tax liability, federal or state, and have not paid the taxes.
So Thomas, I had a question for you. So I have a few questions for you, and this you probably was going to get into some of them, but I just wanted to break it down a little bit more and just ask you the questions, and then we can definitely get those answers to those questions specifically. So,
Okay.
you know, the first the one of the biggest questions is what is a tax and business transactional attorney? You know, because sometimes we never. I guess this is my first time hearing about this type of attorney, so I just wanted you to kind of break that down a little bit.
I appreciate that. Let's start with transactional attorney.
Okay.
A person would come to me and say, "Hey, I've got this hair salon. Well, I do hair. Got a cosmetology license. I do hair. Or I'm an esthetician. I am qualified to do that. I want to have a business. I'm going to hold myself out, right, as someone who can provide this service." So the first thing that one would do or should wonder is, which one of these entities should I conduct business through? I've heard about a C Corp, an S Corp, a limited liability company, which many people hear about or talk about now. So the first thing I do is take a look at what the conduct of business is going to be, and we would determine which entity to conduct business through. Would you? Can I be indulged 1 second?
Sure.
Okay.
So while Thomas is getting back to us, for those business owners that's out there, this is the person you probably want to meet. And so, if you are struggling with putting your business into some type of S corp or anything like that, this Thomas would definitely be able to provide the answers for that. So that's the reason why we got him on today's call, and that's the reason why we're asking him these questions. Okay, Thomas, go ahead.
Okay. And in the spirit of that, we are like, that was the IRS calling me back regarding a question I have for a business client. So, but I'll have to cue it up again. So again, you've got your business activity. We're going to determine which entity would be best suited for you to conduct business through. C Corp, S Corp, limited liability company. That's the first thing we do in the transactional space. Now, once we know what we're going to use, okay, I gave the example of being an esthetician. But what if you came to me and said, I want to buy Exco. I want to buy that dry cleaners. We would structure the entity. Then we determine what we were going to do. Is it going to be an asset purchase agreement or a stock purchase agreement? An asset purchase agreement is going to be what we use more times than not, is when you buy the assets, you buy the assets. You don't buy anything ancillary to that. If you buy the stock of a company, then in layman's speak, any fleas, any issue that the corporation has that is represented by that stock, well, you have purchased that. So if taxes were owed by the business, you buy the stock of the business, you bought the tax liabilities. I think that's a good example of what the transactional lawyer does.
And so Thomas, I just had a question to that because what I'm really hearing is that before a person get themselves involved in anything business related, they probably should talk to you first.
You have to talk to me or someone like me who truly understands the space. There are lots of folks who say, "Hey, you don't need those guys. You just file your one-page piece of paper at the Secretary of State, and that will make you an LLC, for example." And it will. Or you file that one-page piece of paper, and it will make you a corporation, a C corporation. It wouldn't make you an S corporation. It wouldn't speak to any of the issues that I've raised right out of the blocks here. So you want someone like me immersed in the business transactional law space. From a tax standpoint, he said, what is a tax lawyer? Again, I was speaking to it before. A tax lawyer, once you are in business, you are going to have an obligation every month to file withholding tax returns. You will have, with that, you could have employment law issues, tax related. The main issue you would have is the withholding taxes being paid over to the government. If you don't do that, you will create significant tax problems for yourself. Many businesses are closed because they have taken the withholding taxes and used them to keep the business afloat. With respect to employment taxes or withholding taxes, that's not your money. That is the government's money. One of the privileges of being an American business owner is to pay half of the Social Security of your employee and collect that money and send it to the government. So, again, as a tax practitioner, again, all issues ancillary to your business activity that involve the IRS, the Department of Revenue, those are what you address as a tax lawyer, as well as preparing corporate and individual income tax returns.
And I was going to say too, like, because you kind of answered two questions into one, because the second question I had was what type of things that you address, and you pretty much covered that too. And so, in a nutshell, like when people are doing any type of business transaction, as far as buying the business, buying stocks in the business, or they already currently have a business, it's a lot of tax stuff there that you guys address. So that's perfect there. So the next question I have for you is what type of counseling do y'all guys provide regarding the formation of business, the acquisition of businesses? So when the people are coming to you, they basically are saying, hey, you know what, I'm about to start this business. What type of business should I start? And I'm assuming that y'all guys provide counseling and all that stuff to be able to aid them into the right direction.
Well, the counsel is the discussion we're having.
Mm-hmm.
Once they would inform me of what they want to do, then the counsel is, here is what is available. Which of these vehicles to conduct business through would be most tax advantageous and transactionally advantageous for you, excuse me. But I'm overemphasizing tax drives business transactions. So that is the counsel. I live in the tax code. I live in the business transactional space, or someone like myself. If he is a true transactional lawyer, he would understand the tax implications of your business activity or transaction. If you went to a large law firm, now that transactional attorney would have the liberty of having a tax department that he would show the transaction to. I am both of those things. I am the tax lawyer and the business transactional lawyer.
Got you. And so what type of returns do you prepare? Tax returns do you prepare?
I appreciate that. My office would prepare the true corporate tax returns for a for-profit entity and for a nonprofit entity, withholding tax returns that would be due, and then the individual tax returns.
So basically, so a person can come to you and get their personal taxes done and their business taxes done together.
Correct. If
Okay.
you have a business, you can't file the personal tax return until the corporate tax return is done, because
Mm-hmm.
the information is addressed on the corporate tax return. Gain or loss, that means you made a profit or you had a loss, is computed on the corporate tax return. If it's a subchapter S corporation, then it comes to your personal tax return on the IRS form K1. So if you're a business owner and someone's saying, hey, well, did you receive a K1? Or if you're an individual engaged in investments, possibly someone might ask, did you receive a K1? A K1 is your portion of the income or loss coming over from the corporation to your personal tax return.
Absolutely. Absolutely. And then, so do your office address federal and state audits as well?
Absolutely. Absolutely. An IRS audit routinely. Again, I've been around 33 years. I've addressed as large as a $40 million tax bill for a client before. But the IRS audit, the Department of Revenue audit, we address routinely. Both of those would again stem from the review by the IRS or Minnesota Department of Revenue, their review of your tax return, corporate or individual, determining whether or not there's an issue or reason to examine it. As I am licensed to practice before the IRS, that allows me to address these tax issues in all 50 states.
Okay, so for anybody that's listening, you can be all anywhere in the 50 states, and you'd be able to provide them tax help.
That's correct.
Okay,
And we do at this time have clients in several states.
got you. And so, with that being said, I mean, obviously, people that that's doing business taxes. One of the questions asked is, can the government seize your home and levy your paychecks? I know the government do have a lot of access to everything. So, can that be a possibility?
Within the realm of possibilities, and very, very routinely happens, the government, IRS, will start with, we'll send you notices asking you, where's our money? What are you going to do to resolve? What are you going to do to resolve it? Yes. If you make the IRS feel like you're ignoring them, there are things they can do, like levy your bank account. The IRS is the only person, the only entity in the US that can just go to your bank account and take your money. The IRS can also go to your employer and say, hey, Mr. Smith owes us some money. So that paycheck you were going to give him, that's our money now. As a business owner, the IRS will go to a vendor. Let's say you built a house for someone and they owed you $10,000. The IRS can go to that person and say, that money's our money. It would happen more, that would be less likely than your being a self-employed person, again, providing services, say, as a flooring guy. General contractor hires you to put flooring in 5 apartment buildings of his. They would go to that contractor and say, that money you owe him, give to us. So yes, the IRS can and will intercept your money. The IRS can and will put a lien against your property. When they take your money, that's called a levy. The IRS will file a tax lien against you. That means, for example, if you owned a home and were trying to sell it, let's say you were going to get 150 after you sold it, and you owed the IRS 151, well, you get nothing. The IRS would take the money. The IRS can also, again, in my 33 years, numerous times I've dealt with that issue.
Wow.
Sometimes we can get the money back. Many times the IRS is not giving it back. The IRS will also seize your property. So, for example, you owe $200,000 in income taxes. You own an apartment building. The government will put a notice on your building telling you, we are seizing your property. That means it's about to be ours. You might think, well, I've got a mortgage from Exco or whomever. The IRS will address, the parties prioritized ahead of them. So if your building was worth, let's make it your residence, because this is what happens. Let's say your house was worth 500 and you owed 200 on your mortgage, so that there was 300 of equity, and for whatever reason you couldn't get to the equity to pay the IRS. They would seize your property, pay that $200,000 mortgage you had against it. That 300 in equity would become theirs. Now, let's say you only owed them $100,000. They don't really care about the value being 3. They would actually sell it and get their money, and you would have lost all of that equity in your home. So you don't want to get to that point with the IRS. They will do that. They will
I was
take
going to say,
the house.
Tom. I was going to say, Thomas. I don't think that you want to put yourself in that position where they're, purposely trying to garnish your wages. Taking your home, taking assets that's a part of the business. And so, I know that this might be a silly question, but for those that's out there that doesn't know, you know, the IRS is obviously different than the Department of Revenue for Minnesota. So can you explain the two?
Absolutely. The Minnesota Department of Revenue can do everything that I just said the IRS can do. The Minnesota Department of Revenue will go to a U.S. bank and tell them that money in that bank account, that's our money. Seize it, take it, levy it. So again, levy it, file a lien against your property, seize your property. It's the state, though. The Minnesota Department of Revenue is the state of Minnesota. The IRS is the federal government. But instead of getting really broad, the Minnesota Department of Revenue can do everything that the IRS can do in terms of taking something from you. None of that has to happen. The notices that come from them cannot be ignored. Many times people say, well, I'm overwhelmed. I'm getting a letter from the IRS. It's best to open it, find a party like myself. At a minimum, open it and call them and say, hey, I see it. I got it. And I'm going to do something about it. That's working it out. If you do that, they will work with you, both the IRS and the Department of Revenue. If you ignore them, they will do something to you. Simple.
Yeah, so I guess life lesson number one: don't ignore them.
101, right? Do not
101.
ignore.
Okay, so Thomas, what type of fee structure do you have there? I know a lot of people are probably listening. They thinking about potentially doing their taxes, or for those business owners out there that probably need a change in scenery and change in tax person. What type of fee structure you have?
I appreciate the way you worded that. I root every season I have, or we receive new clients. In terms of fees, an individual tax return here is I have room, but at a base level, you're going to pay about $450 for a tax return here, an individual tax return. A corporate tax return, you're going to be. I mean, I've prepared a tax return for $25,000 before, but you could anticipate a pretty straightforward corporate tax return. You could pay from $1,250 to $5,000, but think around $1,250. And I have room to work, but that's the range really for a corporate and individual tax return. My normal hourly, I'm sorry, my normal hourly rate as an attorney is $450 an hour, but much of how we bill for the tax work is called a flat rate fee. So it wouldn't be hourly to prepare a tax return. I quote a client a fee to prepare the return.
Okay, so let me clarify some things. I just want to make sure that we got on the same page here. So the flat fee, and so for instance, if we're dealing with businesses, and a lot of times these businesses got problems, and so if you're talking about okay, we need to do the taxes, that's obviously the either can be a flat fee, and if it extends to you also acting as an attorney, those are two different fees, right?
Correct. When I'm functioning,
Mm-hmm.
I am preparing the tax return. Ward Law Offices stamps that tax return.
Gotcha.
That's going to be a flat rate fee. But if you come to me and you say, we haven't filed tax returns for 3 years, so I'm dealing with that matter with the IRS as well. Well, that's different from just preparing the tax return. Now this is a workout of your existing tax liability, which might again be your liability might end up being decreased when these tax returns are prepared. The IRS, in many instances, state of Minnesota, will excuse me, will prepare a tax return for you. That's called a commissioner filed return for the state, an IRS filed return for the IRS. So there could be a fee for the tax lawyer addressing the working out of your tax liability with the IRS. And then the fee, as you mentioned, the flat rate fee for preparing tax returns.
Right, because obviously I know if you, especially with larger, middle to larger companies, where they got 10 plus, 15 plus employees, and they got so much stuff going on, it definitely can be more time consuming as the company gets larger.
Yes, yes.
Mm,
Again, there are pretty standard issues, what I would call a standard issue, uh, and there are very complex IRS issues. Maybe you have multiple entities, or again, the maybe transactionally you have generated this tax liability or issue that's being worked out.
got you. And so, I'm in real estate, and purchasing homes is something that I do, or sell homes is something I do for folks that's purchasing. And so, can you address any type of issues related to purchasing a home from your point of view?
Sure. The number one issue is you may be ready to buy a home. Someone might come to Mr. Harris and say, "Hey, find me a house. I'm ready to go." Mr. Harris says, "We were going to put you with, again, a mortgage lender." And I don't know if Cedric addresses this, but he might. We're going to pull that credit report. I'm sure you
Hmm.
do that. Say, "Look, this might be a challenge for you." The person doesn't even think to tell you, "I have a tax lien out there." So routinely, we run into parties trying to sell their home, parties trying to buy a home. An IRS tax lien is precluding their ability to purchase. So we work through those tax liabilities, sometimes being able to obtain, many times being able to obtain what is called a subordination of the tax obligation, so that a person can obtain money to pay an obligation. Or if they're trying to buy the house, you have the two parties, the buyer, the seller. Buyer wants to buy, seller has a tax lien that is attached to that property. We work those out, being able to, again, secure the release of a tax lien, federal or state. So again, the property can be sold, someone can purchase.
So, I do have another question, and maybe this can be up your alley, or maybe can't be. But what happens if a person's on the Cavers list? So, maybe they took some type of loan out against from the government, whether it be a business loan or a student loan. And we run across this all the time. That's the reason I'm just throwing it at you. Do you handle those as well?
Absolutely. Anywhere there is that type obligation. Now, the SBA loan, for example, defaulted, is not necessarily that's not the IRS yet, but that is a matter that's transactional that we address routinely. What we do is go to the SBA or go to the Department of Education. Their lawyer is the Department of Justice, for the record, and work it out. And they will work it out too. They will get you back on a payment plan. They may or may not release a lien. If it has gone to judgment, you can work through an agreement to pay, which might allow them to release that judgment against you. But yes, we work on those type matters.
Okay, so hopefully people are paying attention to that, because that's a huge question that I see a lot, especially with people buying houses. They always seem to have some type of student loans, or loans outside that's government related, that they are on the Cavers list for.
Yes,
And so, for maybe, and I'm not going to say this is for the older people, but just to say in general, do y'all guys handle like trust and wills? Do y'all write those as well?
absolutely. I have
Hmm.
again 33 years practicing. I have drafted a ton of simple and sophisticated trusts, revocable and irrevocable, and a relatively simple will and very complex wills. Um, I think I've said it. Yes, we address will and trust issues, and really estate planning. Think that way. A party would come to me and say, "Hey, I've got some assets and I've done no estate planning. I want to make sure my grandkids get this or my kids get this." That is a part of what we work through to determine whether or not you're going to use a revocable trust, pour over will to effectuate what you want to have happen with your assets, or maybe it will. A non complex will might serve. It's important to know all wills go to probate. The
Hmm.
revocable trust is used because a revocable trust avoids probate court jurisdiction. And what that means is if you bequeath your assets under the terms of a revocable trust, It does not go to probate, and no one can challenge what you've laid out or detailed in terms of where your assets go. In a will, all wills go to probate, and there can be what's called a will contest. And what that means simply is someone can come and say, I know Cedric didn't mention it, but he always said I was supposed to get the black car. I know he didn't write it down anywhere, but that's what he said. So once one contests your will, the beneficiaries, the people you intended to have something, they will be held up, precluded actually, from receiving some portion or all of what is being given to them until this contest is settled. So many people in this era use the revocable trust to ensure no one's trying to challenge what they're trying to do.
And I want to add something to that piece as well, because obviously in my field, we get a lot of people that's buying assets, whether it's a personal asset or as an investment. And so, putting your asset inside of a trust, I'm assuming you do that as well.
We do, yes.
Hmm.
Now, there's lots of information out here. I know the internet, people going to be routine. Trust. I put my stuff in a trust, and then no one can get to it. That's not really true. Okay? There are trusts that will protect certain individuals from claims. For example, a special needs trust will control an individual's ability to take their assets and buy a Ferrari, for example. The car dealership might have to give the money back because this person was vulnerable or deemed to be a vulnerable person. And as such, you couldn't just contract with them. But in terms of, for example, I've got a house. I put the house in the revocable trust. You're in a car accident, you kill someone, well, they can't get to my assets because they're in a trust. It's not true. A revocable trust is your alter ego. It's run under your social security number, as opposed to an irrevocable trust, which in that instance, you relinquish all right, title, and interest to what's in the trust. Effectively, you've told the world, that's not mine anymore. That's a different circumstance. You may be able to fend off a claim against you personally, a claim against these assets that are in that trust. I speak to people on a case-by-case basis, facts and circumstances driven. But trust can function to, again, protect assets. But it is not always the case that I put my assets in a trust and that means you can't reach them. And many times for that to be the case, that means the person who put them in the trust no longer controls them.
So
it's a big go ahead.
Because I know obviously we don't have enough time to break all of that down because that can go into a bigger piece of the pie. But
For sure.
for those that's listening out there that they have kids, they just purchased a house, they got kids, whether they are older, younger, if anything was to happen to them, putting their house inside of a trust, now they can put the kids as beneficiaries. And so if they pass, forbid that they do, but let's say it happens because it's going to happen to all of us, it'll make it easier for the transition to happen between the kids taking over.
Absolutely. Because now the home is a trust asset and you've made provisions within the trust. You've made it clear, including disinheriting someone. You could have 5 kids and one of them may have done something very bad. So you want it to be clear. I am disinheriting you. You can do that with your trust for sure. Then there's no question, right? She had 5 kids, so she left the house to all of us. No, that can easily be dealt with and can simplify, which is really what you asked. It can simplify things where people have issues. Maybe someone has gone off and gotten into trouble, but has kids. And that person, the grantor, the parent, says, hey, maybe we're kind of tired of you, as it were, and what you've been doing. But those kids you have, my grandkids, I want to make sure they become the owners or receive what you would have received in relation to the property. Yes, all of that can be done in that manner. And that is a place where many people use the revocable trust or other trust vehicle.
Got you. And then so this kind of switching a little bit of gears off of off of trusts, because I know that we can talk about that for hours.
Mm.
Um, so when I was telling you before about the folks that I help, invest in, which are investments, which people like to buy rental properties or currently own a property that they live on one side, rent the other. Um, do you address the tax implications of investors and financial planning as well?
Absolutely. Absolutely. Again,
Mm-hmm.
gain or loss, again, assets being purchased, stock investments, rolling over a property. For example, a person investing in real estate says, hey, I bought this one, I rehabbed it. Man, I'm going to make money on the disposition. Capital gains tax is what one would understand as an issue. I show a party how to avail themselves to the tax code. It's called a 1031. That's section 1031 of the tax code. It's called a like kind exchange. So if you take the proceeds from the sale of that asset, that house, purchase a similarly situated property, that will defer the, again, tax implications. It will not wipe them out completely, but it's deferral, not avoidance. You just kick the can down the road, as it were. But it's a very good tool. Again, you take all your proceeds, no capital gains tax. You can use all of those proceeds to buy another property. And again, it's coming with you. The gain is there. But upon the final disposition of the property, that will trigger the capital gains tax. But people routinely do that. That being, again, engage in a
Okay,
like kind exchange.
so you just opened up another can of worms. So are you saying that you also do 1031 exchanges too?
I am.
Oh Lord.
Absolutely. And would love to
Okay,
have
so
anyone listening to this podcast who's in this space and doesn't have a true business and tax lawyer. And for you, Cedric, that's right. That's
oh yeah,
my
absolutely.
goal.
Oh yeah, I got more questions outside of this, so we'll talk after.
Okay.
Um, okay, so let's wrap this up. I got another two questions for you.
Okay. It
Um,
is tax season.
yeah, I know, I get it. Uh, so the
Work.
difference between a profit and a nonprofit entity, you
Sure.
know, so if obviously, churches and things like that, they can be non for profit. But can you speak to that?
Sure. We'll do the for profit entity first. A for profit entity is an entity through which you engage in business activity with the goal to make a profit. Many restaurants go bad in the first 5 years and don't win. But again, for profit corporation in the state of Minnesota, that's section 302A of the Minnesota statute. You have engaged in activity to make a profit. It's that straightforward. So, for example, if you buy some houses, strike that. You buy some horses. You love horses, right? And you live out in Minnetrista. You love your horses. You take care of them. Got a lot of money.
Uh huh.
Having these horses, it's called a hobby. That's not a business that the government allows you to deduct the expenses associated with keeping those horses
Hmm.
that you incur. But since I mentioned horses and a hobby, if you buy horses, raise them, groom them with the intent to sell them and make a profit, well, that's a business. Okay. But that horse area is one that the IRS routinely leans into because many times people think, well, it costs a lot to have these horses, so it must be deductible somehow. Nonprofit corporation in the state of Minnesota, first, that's section 317A of the Minnesota statute. You're forming an entity, and the goal is to be exempt from income tax. Now, by merely forming an entity and registering it as a nonprofit corporation, that does not make it exempt from federal income tax. By filing documents with the IRS, under Section 501c3 of the tax code, which is what that is how an entity can have conferred upon it tax exempt status. And what that means is that you are able to raise money and not pay federal income tax on it. It's a pretty big deal to have federally tax or federal tax exempt status. But that is what it is. It's filing with the state first, then submitting documentation to the IRS seeking federal tax exempt status or federal exemption from income tax.
Yeah, that can be a big piece there. So I'm not going to touch on too much of that because we'll be here for talking for another 20 minutes. And so just to wrap it up, Thomas, we're just going to go back and talk about the things. Obviously, you said that you do business tax. You can
Yes.
do corporate tax and withholdings. You can do if people out there that's being audited by the IRS, you can do that.
Yes.
I mean, you could do will and trust documents, which is is that part of family law, ain't it?
No, that's estate planning.
Oh, estate planning. Yes,
That's
it's estate
estate
planning.
planning.
Yep, estate planning.
Normally, your
Uh,
family law attorney is addressing is not
like
necessarily
the
drafting a will and trust instrument for you, but they could. But again, a big that's a whole section in itself. I think in terms of practicing that estate planning.
right. That's what I was thinking of two different things.
No worries.
And then also you can do 1031 exchanges. So I mean, it seemed like you kind of got a plethora of things that you can do. So like a jack of all trades.
In the transactional space. So, right, if you're buying a business, if you're buying real estate, I think Cedric, you could speak to this. When you're buying a property, there is much at issue. I would always suggest one had counsel somewhere along the road. Either that person or Cedric is going to have a relationship or should have with that business attorney who can read those documents and address things even in the personal or residential setting. Due diligence. You don't want to close and after the closing have the city come to you and say, by the way, there's a bill out there for where we had to run the sewer to that house and it never got addressed. So that's 15 grand. I've dealt with that issue for a party before. So on the acquisition of residential property and certainly commercial property, you should have counsel. That's a
And
business
so,
transaction to me.
yep. And so just to wrap it up, did you have any final words that you want the audience to know about you, your practice, things that you're uh, personally doing?
Well,
Go ahead.
first, I appreciate having met Mr. Harris and him saying, hey, I have this podcast. I bet there'd be some folks who you'd like to talk to about some of these issues. Again, I'm a true tax attorney, which means right now, the corporate filing deadline is March 15th. If someone hasn't obtained or doesn't have a true tax attorney, I'd love to have them here to address that corporate filing, your personal tax return. Again, we do that. That's compliance. Would love to have any of that right now. We are in tax season. If you are thinking you want to have a business or you are already trying to or addressing issues related to the conduct of business, I'm the person you should call, or you should have a guy like us to address those issues so that you miss pitfalls. I give you a metaphor. I mean, lawyers fight fires. You can always come find yourself a strong attorney and say, hey, we miscued over here and we have this issue. The best way to use a tax and business transactional lawyer, is on the front end. Say, hey, I'm thinking about doing XYZ. What are the implications, tax and non-tax, of engaging in that transaction? That's who we are. Again, I appreciate being able to talk to folks, and hopefully I hear from someone looking
Oh,
for something like
absolutely, absolutely. So this video will be shared to all of those folks, especially if I know that they're uh, talking about any of the things that we just discussed today. They all going to see this. So this would be like basically your commercial, so to speak.
that. Okay.
Um, And so I definitely appreciate the time, Mr. Thomas. I know it's tax season for you, and you got juggling a lot of things over there. And for those that's listening, it's hard to get people like this on on any type of platform because they got so much stuff they're doing. So with that being said, Mr. Thomas, we're going to wrap it up. And if anybody have questions, we're going to forward them over to Mr. Thomas, and hopefully he can address them, and we can go from there.
Cedric, thanks for your time and the video. How about that?
Absolutely, man. You have a great day.
Thank you as well.
Yep. Bye bye.
Bye bye.